Today's video, we're going to cover 3 coins. One of my good friends asked me about these 3 coins. They're low market cap. They're kind of off the radar. They're not in the top 100 coins. And we want to see what's happening with these 3 coins. Do they have high potential? Do they have low potential? What's happening right now from a technical standpoint, fundamentals? Do we need to, do some type of analysis? So the 3 that we're going to look at is MOF. Molecular futures. We're going to look at Hypercash and HyperDao. And we're going to look at it from an objective standpoint, mainly from a psychological point of view. Is there good buying opportunities and should we anticipate highs, lows, and what's happening overall? So if you like today's video, hit the like button, subscribe, hit the bell notification. And if you don't know who I am by now, my name is Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. I've been trading the currency markets for over 15 years, and today I'm going to bring that crypto wisdom to you. I was also featured in this best-selling book, High Probability Trading Strategies, back in 2008, and we want to really look at what's happening here. By the way, I'm going to really focus on Elliott Wave theory. So if you haven't taken my free crypto trading masterclass, it's in the description below. It covers the theory, but today we're going to look at the practical. So let's focus on molecular future. So I haven't really dived in only in a very high level. So let's just quickly look at the weekly chart first. And I want to just look at, what's going on over here. Well, actually, let's just do 2 things. I'm going to go to CoinMarketCap very quickly, and I'm going to open up a new tab, because some of the challenges with coins that are not in the top 100 is the data feed and how much data do we actually have available to make judgments. But yeah, this is the main kind of high and has made a big correction. And then we're at this phase of the market. So we're going to focus on this now part of the market, what's happening right now and what should we anticipate as a minimum and then as if it unfolds perfectly. So let's just jump back into MOF. All right, straight away, what I'm seeing here, obviously we had this massive correction, right? What was the date of this correction? December, this is a weekly chart, December 2019, 2020, big correction. And then we had this move up, some confidence back in the market, another correction, and then we're at this phase over here. So we're going to jump into the daily chart next. Daily chart, I'm just going to click it like this, open up the daily chart. Now we're going to focus on this part of the market, right? So let's just look at the macro picture, and then we'll jump into the micro, and let's use the closing day data. It just gets rid of the noise. Sometimes there's wide bars like this, and this is noise, and that can be quite distracting. It doesn't really give us a true reflection of the project, whereas this just cleans it up for us, so it gives us the macro picture. So very clearly here, we're seeing something quite strong, which is called, the macro picture is going to be a wave 1. So this is like the big scale picture, a wave 2 down here. And if you're not familiar with Fibonacci ratio, just check this out. I can tell even just from looking at it, right? It's a good correction. The typical maximum correction of a wave 2 is 78.6% retracement. Let's just pull this here. Boom. And we'll probably see that it's tagged it perfectly in that zone. Look at that zone, it's right in that zone. And then the maximum of a wave C, I'm jumping into a micro count because this is important. Not micro, sorry, intermediate. So this is a wave 2, but does this break down into any obvious pattern? And what I'm seeing is a nice A, B, C. And a typical wave C measured from a wave A maximum is 162%. So even if I just project it from here, and the 2 numbers that I'm looking for, most common is 100%. Oh, look at that. It's like bang on, right? Bang on, 100%, right? So we don't even need to do the other one. That's the most common. Do a couple of others. So we can confirm this as a wave 2. And now we've got this move to the upside. We've retested this, and then we had another pullback. So if this is a wave 2 low, what should we anticipate next? Well, we should anticipate a wave 3, right? A wave 3, which should exceed this high, which we already have if we look to the right. But we should actually anticipate moves to the upside. And what's the move that we should anticipate? Well, it's that same ratio, that golden mean, that Fibonacci golden mean. We measure this wave 1 and project it forward from this wave 2 low. And the wave 2 typical minimum is 1.618. And then extended wave 3 is 2.618. And this just measures the psychology of the markets. So we can see that we're approaching this number and then this number here. So if this is a wave 3, Then we want to go into that lesser degree intermediate count, right? So that's the same level as this A, B, C over 2. What does this look like to you? Well, to me, it just looks like, very simply, I'm going to change the color. Let's just change it to slightly smaller text. Let's just change to orange. Right here, it looks like an intermediate wave 1 of a 3. Let me make this really clear to you, because this is where people sometimes lose it. Of a wave 3. Let me put it in English. Right. Down here, let's see, in a wave 2 of a wave 3, and then we are seeing what looks like an A, B, C, and of a wave 3, which is really, really important. And now we can start looking at what should we anticipate next on this lesser degree time frame. Is actually a 1, a 2, and a 3 of a 3, and that tends to be quite impulsive. So that the same metric that we did before, we're going to do over here. We're going to measure this micro or the intermediate wave 1 and project it forward from this wave 3. And what we're looking for is cluster of prices, right? So now we've got this zone and this zone. We've got 2 zones over here. So it's likely that we're going to exceed this one and get towards this one. There's 2 other numbers that we could do. But let's just focus on the short term now. Let's just short term. Let's just quickly do 2 more things on this one, because I've got 3 coins we're going to cover today. Molecular futures is the first one. If we look at the weekly chart, it's overbought. Overbought is the momentum. I just want to double check this. I always try and get 2 and get a really clear viewpoint. This one is catching the highs and the lows. Okay, cool. So what we want to be aware of is the weekly chart momentum. Let me just double click on this. Is overbought. So we should expect the next few weeks to be sideways to down, right? And then the daily is up and up. So the next few days we'll probably end up finishing this 1, 2, 3, 4, 5. It's like a wave 1 over 3 over 3. You can't, because what happens with the psychology of the markets is they break down on a lesser and lesser degree, but the same patterns repeat themselves. It's almost like the more you zoom in. So what we'll probably anticipate is, if I just go here, is this looks like on even a lesser degree count, a wave 1, 2, 3, 4, 5 of a 1 of a 3 of a 3. I know. That's 4 degrees count. That's advanced Elliott wave. But you asked, right? You asked. So we want to go, okay, what's likely to occur? Well, what's likely to occur is we'll probably see a bit more upside movement. So typical, let's just go like immediate. I should have probably asked what time frame you was asking for. It looks like a 1, 2, 3, 4, a 5, and then there's a particular ratio. I'm zooming through this because I know I'm going to cover 3 coins today. The immediate price action, we should be aware of this number here, this 62% of this here. But overall, it's looking quite healthy. It's looking quite healthy. I don't know what the volume is on this. The volume is 10 million and the market cap is 60 million. So that's reasonable volume. You know, it's a 1-to-6 ratio. So let's just jump on here. So what should we anticipate? Okay, let's just zoom out. Let's just do one last thing on this one. What should we anticipate? Okay, a 1, 2. What we should anticipate is what looks like a 1, 2, a 3 of a 3. It's probably going to be quite bullish. Just looking at how it's unfolding at the moment and the volume, it'll probably be something like even like this, or even it'll be roughly 1. Boom, boom. Hang on, let me just check. This was that. This one was this one. I want to look at this one here. This one, boom, boom, boom. Yeah, we'll probably see that. So we'll see this 1, 2, probably get to around this 3, something like this. It might overextend, and then some type of correction. This is what we should anticipate, and then like a bullish movement to the upside, and then that will be the 1, 2, 3 of a wave 3. So there we go. That's the molecular futures. So we'll do a fast one on that one, right? Because I know I can dive deeper and deeper. We can spend almost like an hour on this. So now we're going to go to the next one, which is Hypercash. So again, I'm going to start with CoinMarketCap. CoinMarketCap, Hypercash has a market capitalization of 40 million. It's been as high as its all-time high market cap was 165 million back in 2017. A couple of things off the bat. Let's look at the volume. Volume's relatively low. It's like 1 to 10. 1 to 10. So slightly lower in terms of ratio compared to the other one. So we just want to be aware of that. How many people are interested in this? And this is currently ranked as, it's in the top 1,000. It was like 520 in terms of the rankings. Whereas molecular futures was 405. So they're both in the top 500 thereabouts. So Hypercash, what we want to be aware of is, like with many projects in the 2017 bull run, did an amazing move to the upside, and like with many projects, did a massive correction. But we want to focus on this more recent data. Had this move up in June 2019, and then another correction. And what we want to focus on is what's happening right now. Is there anything interesting happening right now that can help make buying decisions? So let's just focus on this immediate data. So this is Hypercash, this one here. So straight away, we'll do this one almost like a snapshot. Let's just zoom in right here. We got the weekly momentum's on the upside, right? Weekly momentum. So we should see, if you look at when this was bullish, it was 1, 2, 3, 4, 5, 6, 7, 8, 6 to 8 weeks to the upside, which is around 1.5 to 2 months. I'm going to anticipate the same. And then we jump into this daily chart. Again, both are bullish, both indicators are bullish. But what I want to focus on is this movement here. Is there any clear chart pattern? Now, what we want to be aware of when it comes to Elliott Wave theory and Fibonacci is only 50 to 70% of the time that the markets will represent a clear psychological pattern. So if we just go to the closing data to clean it up, sometimes there's these wide bars, and that just shows like panic buying and panic selling in that intraday data. But when we have a closing data, it just cleans it up for us. All right, so this is what I'm seeing. Let's just do a quick macro picture. Let me zoom in here so you can see the whole thing, because this one looks interesting. Actually, it looks interesting. So we've got this nice wave. Well, it looks like a wave 1, a wave 2, a wave 3, a wave 4, and then this really bullish wave 5. Like that's what you call like some serious fear of missing out, some serious panic buying and everything else, and then some amazing profit taking, almost like the market resets and we're looking to go again. So this wave 5 here. So what we anticipate when we see this, like ideally we want to see this ahead of time. So let me just do this. Let me do this for the fun of it. Use this replay button. Let's just say you see this market unfolding like this, and this happens on all markets. We saw it with Dogecoin recently also. You see a 1, 2, 3, a very deep 4. Now I wouldn't, at the time I probably wouldn't have called this a 4. Why? Because it's quite impulsive. It's quite impulsive, and 4 has more of a corrective pattern. But now we've got this high has been exceeded. Then we go, okay, this might be a complex 4. Is an unusual 4. And look, that's the game that we're in. We're in the business of trading, the business of investing, and the markets don't unfold perfectly every time, but then we just need to make decisions. That's why we have a confluence of events. We have pattern, we have price, we have time, we have momentum. And even if 3 of the 4 are telling us something, that's more than enough information to make a buying decision or stand aside or sell. But now let's just look at price action, right? Just for the fun of it, because you'll see this unfold time and time again. Now, if we just do these typical wave 5 projections, wave 5, typically, if you measure wave 1 to wave 3 high, beginning of wave 1 to wave 3 high, from the wave 4 low, the typical maximum is 100%. And if it overextends, it will overextend to 1.618, which is even literally off the charts, like up here, right? And then as the data unfolds, this is now breaking down to, if we just look at it like this, and you want to be aware of this, because this will give you very powerful information, because you're seeing stuff other people can't see. That means you can make decisions based on stuff people are just totally unaware of, and most are unthinking. There's kind of like 4 types of people in this market. There's let's just break them down into 2 actually. There's the thinking and the unthinking, and the people that are unthinking is referred to as the dumb money. And not because they're dumb, but more just because they are buying based on emotions, and there's no real trade plan, there's no real investment plan. But what I'm seeing here is a 1, 2, 3, 4, 5 over 1. There's a wave 2. There's this wave 3. A typical wave 3. I'm moving faster because I don't want to cover one more coin. A wave 3 is typically 1.618, which is here. This hasn't reached that yet. So I would actually, let's just have a few more days of data. Let's just see how it goes. We go boom, and it shoots past this overextension of this wave 3. So I would then even look at, excuse me, the overextension is 2.618, which is up here. And then if we just click OK, I'm waiting for a pullback because this looks like still hasn't completed a wave 3. Here we got this little pullback, and then this might be the end of a wave 3, and then we're doing a final leg. So now we've exceeded this zone. We've smashed through this zone. So the next overextension zone of a wave 5 is up here. And we can also do an external retracement that helps us. So I'm moving in hyperspeed now. It's called Hypercash. I'm moving in hyperspeed. Let's just do a 1.618. Look at that. Look at that. Bang. Right? It's right in that zone. Right? For a wave 5 high. So we've got 1, 2, 3, 4, 5. So right now, if I was in this position at this point, I'm looking to take profits. I will at least be taking my initial investment off the table. I'll be looking to exit. Why? Because what tends to happen when you get to a wave 5 high is a 50% correction. So let's just see how the market unfolded. Oh, look at that. Look at that. Look at that. I know we saw it in hindsight before. It just smashed through this number. Look at that. Smashed through that number. So now this is what you call panic buying. Panic buying, overextension. But again, this is like a 1, 2, 3, 4, 5 of a wave 3. And this looks like a 1, 2, 3. That is super hyperextension. So we want to be aware of that. Might even need to reevaluate the wave count. But right now, I'm looking to trail my stop loss closer to the market because this kind of price action can't last for that long because money's going to buy out. The buying power will run out, right? And the people that bought down here are inevitably going to be taking profits. And that's typically where we see a correction. So we saw, oh my Lord, look at this. Look at that. Jesus. Okay, we labeled it in advance. So we know this. We wouldn't have known this at the time. But this is why it's often good practice to not sell at a fixed point. Because right now, you know, looking at these numbers, if I just delete all of these numbers, in hindsight, what we're looking at is what looks like a 1, 2. Let me just delete these even and do it like this, right? It looks like a nice 1, 2, 3, 4, 5 over 5, right? And this will be a micro count, micro, right? And then we can do a few other counts within this count, so we can do an analysis on, and this is where we want. I'm going to show you something. I'm going to show you something so powerful. Most people don't know what I'm about to show you, and if you see this happening, you know it's time to take profits. So we're going to do this, what we did earlier, right? This is the typical wave 5, right? Yeah, we wouldn't normally put this in even for a typical wave 5, right? That's the typical wave 5, and we've shot through that. You know, it's inevitable. Like you can just see it. It's clear, right? And then, but there's this next count, 1, 2, 3, 4, 5, projected from here, and the typical wave 5 high is look at this on the 100%. Right? So this one I didn't plan in advance. Look at that. We would have known that information in advance, and knowing that the typical wave 5 on the lesser degree is here. So we've exceeded that. So this is like, you know, I'm ready to take profits because I know this is likely going to have a big pullback, and then we know in this particular case, it did a pullback. So I would have probably been exited at this point over here. And then we had a nice correction. Look at this correction, right? And then as this market unfolds, what we will be looking for, this is great textbook Elliott Wave now. This is over here for this section. So this just shows, you know, because every market, and Hypercash is referred to as a market. Every market has its own personality, and you want to understand that personality so you can make objective decisions. So here, next, what we're going to look at is now we're in the corrective phase. So this is pretty much, this is a big move down, bigger than this, bigger than this, bigger than this. So this says, okay, we're the sellers have overtaken the buyers, and we're in this corrective phase of the market. So let's now take this low to this high. And these are the 3 corrective typical numbers, right? Minimum is 50%, typical is 62, maximum is 78.6. Let me just move it over here using closing data. Because look how beautiful the closing data is, right? And if I bring up the candlesticks on a daily chart, it just gets a bit noisy. Like look how overextended, oh my Lord, look how overextended that went, right? It went all the way up to, what is that even priced? Like, that is like, it went to $3.50 overextension, pulled back down in the same day to $2.70. And that's what you call classic panic buying. And you'll see this with Bitcoin. You'll see it with We saw it with Dogecoin. We see it all the time, right? And then let's just get a bit more data on the chart here, right? So what we're anticipating, look at that, boom, is we always anticipate a correction to be a minimum of 3 waves. So minimum of 3 waves. Now at this data point, and we're getting closer to the live data now, we got this initial wave down, a wave A, an A, B, C on a wave up, and then we anticipate a wave C down. We'll probably hit this part here. And as the market comes a bit further down, the fact that we've gone below this low is the first strong indication that this is a wave B high, right? And there's an A, B, C. You know, there's something quite cool we can do. Now this is turned into a masterclass. I might even just, yeah, we'll just do it, right? We'll just do it up. We'll put in the timestamp. We'll do timestamps today. Timestamps we'll put in this video because this is a slightly longer video. This correction to the correction, look at that, 78.6% retracement, right? And we can project this in advance. And you want to know this for profit taking and buying and selling. This is really, really valuable information. Okay, I know we're doing it in hindsight, but then we're going to look into the future for the next one. Typical ABC is 100%. Look at this. Textbook stuff here. Look at this. This just shows that the psychology of the market is just prime time. This is prime time. It doesn't get much better than this. And this is like an A, B, C of a B. And we'll do it on a sub micro, right? Because it's a lesser degree wave count. It's an ABC of a B, which is textbook Elliott wave. If you take my crypto trading masterclass, I cover the theory of this. Now this is textbook. This is like creme de la creme. I might even just add this to my courses because this section over here, look at this. 1, 2, 3, 4, panic buying 5, A, B, C. We're on this C coming down. Then we can just get rid of this over here. You can tell I'm passionate about this stuff, right? I love it when a plan comes together like this. And I make my business decisions when it comes to investing and trading when I see this information. So what's next? If this is an A and a B, a wave C has a direct relationship to a wave A. So we measure this wave A and we project it forward from this wave C, high, wave C of a B. And it's in this zone here, in this zone. All right. The time taken for this wave A is often very similar to this time taken of this wave C. So we're going to measure this from there to there, measure this from here to here. So now we've got this time as well. 100 is 100%, that's 162%, 100% is there. So we've exceeded the time, but we haven't hit this price zone yet. So it's probably going to overextend. And this will probably actually break down on a lesser degree into 5 waves. But let's just see how it unfolded. You know, it's just like, boom. So it went straight down to this zone here. It went even lower, even lower. It smashed through this number. Look at that. It smashed through this number. Like it wasn't even there. So then the next number for the 100% is the 1.62. And that's an overextended. I don't even know if it goes below this point. It doesn't. Yeah. So we want to be aware of this. There is another special retracement, which I think I've added, is this number here. It doesn't happen that often, but if it does, you know, we want to be aware of it. Look at that. That's very deep. That goes even beyond the low of the previous low. So that's not what we don't think is going to hit that. All right. So we want to be aware of this zone now. So we've passed time. We've passed price. So this is, you know, the selling is strong on this. The selling is strong on this. And then the market, let's just take it to today's data. And we are here today. All right. So what typically happens next? All right. Well, if this is a wave C low, right, so let's just get rid of all these lines now. Right, it's an overextended wave C low, but this is kind of where we're at. You know, it's almost like the personality of the chart is the personality of the chart. But this move to the upside is bigger than any other corrective move. So that shows us as an overbalance of price and time. And this low hasn't been taken out. So what we should now look at is this part here. This part here. Now it's not as strong as I would like to see it, but there's some buying over here, and then we've got this correction. So we do another retracement. Look at this. We'll do an ABC, and let's see if the personality has stayed the same. We are in this zone. Let's just get rid of these two. We'll even get rid of this one because this one's not that common. We're at a 78.6% retracement. We got what looks like an ABC. Well, it could actually be from here. It could be a 1, 2, 3, 4, 5, 4, and a 5th wave, and then a corrective wave down here. So if this ends up being the first initial impulsive wave, and on a micro level, this ends up being a 1, and this ends up being a 2, I'll put a question mark next to it because it's not been confirmed yet. We want to see some strength. We want to see some strength. What will the strength look like? This strength will look like this. We want to see bump. Where's some obvious numbers that we want to be aware of? There's these swing highs over here. So we've gone over this swing high. It will be good to see some price action above this swing high. So overall, if this ends up being, let's just look at the next few weeks price action. Let's just go, I must have done daily. Let's just zoom in like this. Let's ignore everything other than, just get rid of this, get rid of this. Let's just go on the macro picture for this particular time frame from the psychology from December 2020 to now. Is what I'm seeing is over here. Let's make the text nice and big. We're going to say 1, bang. Down here, well, potentially could be, looks like a wave 2. And if this is the case, purely from a technical, psychological standpoint, you know, it's a deep correction. We want to be aware of that. It's a deep correction. But if this low holds and this low holds, what we should anticipate, and we want to see a bit more strength over here, is boom, new move to the upside. And let's just do a price projection for this. We're going to measure this low, bang, measure this high, project it from this wave 2 low. The minimum, if it wasn't a 1-2, is this price point here, which is $2, around $3. But if it is a wave 3, the typical minimum is 1.618. And as you can see over here, it overextended. So I wouldn't be surprised if this did take off. It's going to moon. It's going to go a bit nuts. Probably go to $4.30 and maybe even $5.58, $6.60. And then that would be some good profit taking opportunities before a wave 4 might kick off. So now let's just zoom back out. Yeah, here we go. So in the grand scheme of things, what we just looked at is like on this really micro picture down here, like all of this, all that we just covered is in this tiny little zone down here. You know, in the grand scheme of things, this was the all-time high, I believe, all-time high of like $29. Will it hit $29 again? Man, if Bitcoin really does its thing and that optimism comes to the market and this starts really taking off and these highs come in, but the recent high was over here. And there is an argument where we can argue quite comfortably that this could be on even a bigger scale, a 1 over here. And then we've had this complex correction going on all the way down to even either this low or even this low of a wave 2. And now the markets are now starting to get that optimism back, and it's starting to get some more buying power. And yeah, so it'll be interesting to see how this maps out. But in terms of textbook Elliott Wave, you know, for this initial part, you know, this was nice. 1, 2, 3, 4, 5 correction, big profit taking, ABC, wave 2, and if it does unfold to a wave 3, we should see this, at least this 1.618 being reached. All right, we got one more. Jeez, this one's a good one. This one we're going to keep short and sweet because HyperDao out of the 3 is the weakest. Why do I say that? Let's jump into coin market cap. It's 1,000 in position. The market cap is the lowest, 6 million, but the volume is tiny. The volume is like $150,000. What's that? That's 20, 30, 30. What's that? I'm thinking 1 to 10, 600. Yeah, 1 to 10. It's like 1 in 100, I think. 150th, give or take. What am I going on about? Let me show you. The volume is roughly 150,000 divided by, let's call it 6 million. It's 2%. So 1 out of 50. You know, the ratio, the volume to, it says it even down here. CoinMarketCap starts to calculate that for us. Looking at the price action, how long has this been out? This has been March 2020. Interesting chart patterns over here. I think let's have a look. The main challenge with this one, even before going into technical analysis, I personally would be mindful of this one just because of the volume. The volume is tiny. The volume is absolutely tiny. And what that means is it's hard to sell. If there's no buyers, even if it does a 10x, but there's no buyers and you got a lot of money in there, it's hard to sell. So it's just be mindful of this. But there's a similar chart pattern with HyperDao, like a 1, 2, 3, 4, 5, big sell-off, correction, ABC, and it might take off again. But the volume up here was 400,000, not that high, 10,000, 1 million down here. Up here was a bit more healthier, 5 million volume, 2 million over here. But down here, the volume is quite weak, which means that there's not a lot of eyeballs on it. But a similar kind of pattern to Hypercash. So yeah, we won't dive into this one too deep, but it looks like a similar pattern. They might be correlated, Hypercash and HyperDao. When this one does well, the other one does well. I'm assuming this is like a utility token. So there you go. So there we covered 3. Ooh, but forget the 3 for a second. We covered some important lessons, really important lessons. Elliott Wave theory, 1, 2, 3, 4, 5. Buying and selling points, Fibonacci ratios, how to minimize your losses and maximize your gains, because you want to know how to take profits, get that into your business plan, your trading plan, whether it's a top 100 coin or if it's not in the top 100, because sometimes if they're not in the top 100 and it's got potential to be in the top 100, there's some real high opportunity gains out there, but we're going to experience big highs but also big corrections. So you want to be aware of that. So if you like today's masterclass video today, take my crypto trading masterclass, which is in the link below. It covers the Elliott Wave theory. That's the important part, but I also cover some money management secrets as well. If you like today's video, like, subscribe, hit the bell notification, share this video because there's some important lessons. We'll see if we can get some timestamps because they're a bit longer. So let's finish on a quote. I brought this book up on my last video. As a man thinketh. Let's see if I can find a short quote. I love my quotes. Let's see. Sometimes these ones are a bit longer. I'm just going to go see if I can find one that's a few lines. Jeez, these are all long. Oh my God, I don't want to read you like a whole paragraph. Okay, this one is relatively short in comparison to the others. Let's see. A man's mind, and I'm assuming a woman's mind, may be likened to a garden, which may be intelligently cultivated or allowed to run wild. But whether cultivated or neglected, it must and will bring forth. If no useful seeds are put into it, then an abundance of useless weed seeds will fall therein and will continue to produce their kind. In other words, whatever you put into your mind is what you create for your life. I got another quote on my wall. As you think, so you shall become. Bruce Lee. All right, I'll see you.